Bill Ackman's blank check company was dropping a roughly $4 billion deal to buy 10% of Universal Music Group, home to stars like Taylor Swift and Lady Gaga. In a letter to investors in his SPAC, Ackman said the SPAC's board unanimously decided not to move forward. This after the SEC privately took issue with several elements of the proposed deal that could have potentially blocked it, including whether its structure met NYSE rules. Now, Ackman says he still intends to become a long-term Universal shareholder when the company owned by French group Vivendi goes public in September. His SPAC will now look for a new combination target. And joining us right now exclusively to talk about that and so much more is Bill Ackman, CEO of Pershing Square Capital Management. Bill, it's great to see you this morning, to be able to talk to you on a morning when this headline emerged and this deal has effectively been called off. I do know that your hedge fund will now step into the place effectively of the SPAC, but tell us what happened.
Sure. So just to rewind, if we go back just a few weeks, we announced the transaction, and a couple weeks later, before we signed the deal, the SEC came to us and said, we have some concern about whether RemainCo, this entity we were creating, was going to become an investment company. In order to address the SEC's concern, we changed the structure of the deal to provide that we were going to contribute the stock that we purchased to a trust. And we thought that would address the issue. And then we signed the deal, and then we pushed forward with the transaction. And then actually in the last few days, the SEC raised, I would say, a deal killer, which is they said that in their view, the transaction did not meet the New York Stock Exchange SPAC rules. And what that meant, I would call that a dagger in the heart of the transaction, put Tontine in a very awkward spot. And we love Universal. We were excited to bring this deal to the Pershing Square Tontine shareholders. Not being able to do the transaction, we offered to take it off the hands of the public company. That was actually built into the transaction, the right to assign to an affiliate. And we've also assumed an indemnity obligation, some expenses, so that we put Tontine kind of back in the place where it was as if we hadn't done the deal. And now we have 18 months to find another transaction, and that one's going to be a merger. This one, we structured the way we did really to accommodate the ability to acquire Universal, because we were so excited about the business and we wanted to be owned by our shareholders. SEC didn't like it, and therefore we're going to do a more conventional merger. But our intent was to do a merger all along. It was really Vivendi's, some issues on their side that caused us to structure the deal this way.
Bill, was this just too complicated? I think a lot of us, including myself, struggled to be able to articulate and explain to the public what exactly this was. It was very different in many ways than a traditional SPAC. Clearly, the investors also felt perhaps that this was too complex because they started selling effectively the shares and they fell in price.
Sure. So what happened was, I think, we really have two kinds of investors. When we went public, we got to select all the investors, and we picked investors who had a very long-term orientation. They wanted to, they were kind of going to be partners with us in buying a business we own for the next, multiple years. In our case, probably a decade or more. And then I would say the Reddit community got excited about Tontine, and a lot of shorter-term investors came in and said, look, I want to bet on a deal being announced, the day one pop. A lot of those investors were levered. A lot of those investors bought options. And we announced a deal that, unfortunately, is very bad if you're levered or if you own options, because when the requirement to put the stock in a trust account is very detrimental if you're a margin holder. It's also very detrimental if you're an option holder. So we probably had none of those investors came into the IPO, but by the time of announcement, about a third of our stock, I think, was held by people hoping, that we're going to announce a transaction where the stock doubles, if you will, the first day. There are a lot of investors that have been investing in SPACs that way, and I have no issue with a short-term investor, and we didn't design the transaction to affect short-term investors, but we were really focused on creating kind of long-term value. What's interesting is all of these problems go away by the end of the year. The issues that people were concerned about is, one, my stock that you buy and I'm not going to get for 4 months. It's going to sit in a trust account. We didn't like that, but that was really something we had to do for regulatory reasons.
Bill,
another issue, Universal. Just stick with it for 1 second. But Universal is going to be a Dutch-listed company. People didn't love that, but we believed, by the time that we distributed the stock to shareholders, it would likely be, hopefully, be a New York Stock Exchange-listed company. So each of these problems if you could hold the stock for 6 months, I think people would do very, very well. But unfortunately, I would say a meaningful percentage of our investors needed to hold it for a much shorter period of time, right. And it had a negative impact on them, and that I think has driven the stock down.
Bill, what was the mistake, though, here? Because clearly the SEC was preparing to block the deal or to make it very difficult for you to close on time. Did you get bad advice from your lawyers? Did you try to press ahead despite the bad advice? How do you think about that?
Sure, we have great lawyers. I mean, Joe Schenker, Scott Miller, Sullivan Cromwell, Steve Fraden, Greg Patty at Cadwalader. We have Steve Bigler, one of the best Delaware lawyers. We have great lawyers, but we don't just rely on lawyers. We read the law ourselves. And in this case, if you look at the New York Stock Exchange rules, there's a rule called, I think it's 102.06, which is the SPAC requirements. What's interesting is in January or early February, I called the New York Stock Exchange and I told them about the transaction. I didn't tell them the company, but I talked to them about the structure. I described it. It's really their rules. These are not SEC rules on SPACs. And New York Stock Exchange, I would say, up until Thursday, was extremely supportive of this transaction. They understood the structure. They liked our SPARC structure, which was this warrant that we're going to issue to our shareholders. They were excited about it. The only disappointment they had is that Universal wouldn't be initially listed on the exchange. So we had the support of the exchange. Our lawyers, gave us, from the first week when we realized we had to do this as a stock purchase transaction, they reviewed the rules. They were quite comfortable. And if you read the rules yourself, the rules give a number of, SPACs don't have to do mergers. They can do asset purchases. According to the rules, they can do stock purchases. Right. And we're not the first SPAC to buy a minority interest in a private company and distribute it to shareholders. There are other, examples, and that gave us confidence. Now, we're a super high-profile firm. It's a very large SPAC. I would say the SEC is really, really carefully scrutinizing every SPAC transaction. I think they should, although I would argue what's interesting here is the reason why they should scrutinize SPAC transactions is many SPACs are merging with zero revenue companies at crazy valuations. The sponsors putting up, numbers saying, here's what the EBITDA is going to be in 5 years. And a lot of retail investors pile in, the stock pops, and then people get hurt. And I think that's motivated Chairman Gensler to focus on SPACs. In our deal, we're buying one of the greatest companies in the world. It has almost no debt. It's got, it's enormously profitable. Its margins are growing. It's got a great long-term trajectory. We're taking no founder stock, no compensation, and even the warrants we bought that we paid $65 million for, we're tearing up in this transaction. So we're literally investing $1.6 billion. Our shareholders are investing $4 billion. We're all buying the same, we're all getting the same common stock, and there's no dilution to our shareholders. So all the reasons why I think the SEC should be focused on SPACs don't apply here. And so I find it a bit striking that the SEC stopped this deal. Right. When I view, again, it's not great. The negative aspects are the trust, which goes away in 4 months. It seems a long time for many investors, forever for a short-term investor. But that was actually driven by something the SEC was focused on, which was, again, Bill, in that case, the Investment Company Act. Yes.
Now that the transaction isn't happening as a SPAC, just to put a fine point on it, Pershing Square, the hedge fund, is effectively stepping into those shoes. So you will now become an even larger owner of Universal Music Group. How are Tontine shareholders who were happy about this deal supposed to think about that?
Well, if you're a Tontine shareholder and you wanted this deal, you should call the SEC and complain, I guess. I would say that would be my first call. I guess the good news for the smaller investor is that Universal is going to become a public company at the end of September. Vivendi is going to basically call it a spinoff or a dividend or distribution. They're going to distribute 60% of the stock to the public. You'll have a chance to buy the shares there. We did have a lot of very supportive shareholders who liked the structure of the transaction, liked that we were taking no warrants, liked that there was a second bite of the apple where we had a smaller entity called RemainCo. And again, for our investors' trouble, we gave them a gift, if you will. This SPARC warrant, which again, I hear you on complexity, but complexity is okay if you're getting something for free. And actually, SPARC is quite an interesting entity. I do believe at some point, once we get this entity approved, it's a much. What we've tried to do is go from SPAC 1.0 to SPAC 2.0. Tontine was SPAC 2.0. No founder stock, no compensation, great alignment, purchase of a warrant. but it had two problems. One is opportunity cost of capital. Like every other SPAC, you put up money, you got to wait. The other problem is pressure on the sponsor, if you will, to do a deal. And we've solved those problems with this entity called SPARC, which is a SPAC where you don't put up your money until we've found a deal, signed a deal, and actually had the SEC approve a registration statement. So I think we're trying to move the bar on SPAC technology. It's unfortunate the SEC chose to shut down this transaction. You'll have to ask them. But I do think the good news, I think everyone can win here. Vivendi, I think, is quite happy. They actually approached us early on as the complexities emerged and said, Bill, would you just buy the stock in Pershing Square directly as opposed to PSTH? But, I'm a fiduciary for PSTH. We've been working on the deal for PSTH, and we're excited to deliver it to our shareholders. And, I moved heaven and earth to make that happen until literally the government sort of put their foot down and said no, at which point we had to go to, I wanted to put Tontine back to where it started. So there were, we lost a little bit of time, unfortunately. We lost a year, but we have plenty of time to do something going forward, and we're going to do a very, very straightforward merger. Our shareholders are going to get the benefit of all the warrants that were issued here, which I think is a nice positive for them. We'll get the benefit of the warrants that we paid for, and we'll do something interesting. And I would say there are a number of companies that we started a dialogue with, a year ago that weren't ready to go public. Now it's a year later. There are some family-owned businesses where, the family was not ready. A year is a long time, and founders or family owners get older. They make different decisions about estate planning, et cetera. We've got a big, capital gains tax potential change here, some changes in estate planning. All of these, I would say, inure to the benefit of the largest SPAC in the world, and I think we're going to find something interesting to do. I can't guarantee that, but I can guarantee we're going to work hard, and we're going to only do something if it makes a lot of sense for our shareholders.
Hey, Bill, philosophically, how tough is it to beat the S&P at this point when the S&P does so well? And in the past, we all know General Growth. You've had some of the greatest trades in history. But then I remember, Penny or take your pick. If you do 51% and you're right, you're like a genius in this business, I think. But someone's writing in, it's like, why Universal Music? Why some legacy dinosaur? Why not, I don't know, crypto, DeFi, cannabis, cloud company or something like that?
Sure.
Why stick with, trying to do such a complicated deal for this old music company? And how hard is it? Have you been beating the S&P for the past 3 or 4 years?
Yeah, no, we've been crushing the S&P, and I'm pleased to say, and we have over a very long period of time, probably 1,000 basis point margin net of fees for, so we've done well. But, your perception of Universal Music is going to change once you really understand the business. You're describing kind of, actually in actually in my case, grandpa's Universal Music.
I know, I'm still, I'm still
right.
listening
And
to the
basically,
Beatles channel.
what's changed about Universal, okay, is streaming, is Spotify, is Apple Music, is Google Music. The content that is being distributed on all of those modern, sexy technologies is content, a third of which is owned by Universal. 40% of the U.S. market, and it's not just the historical content, it's not just the Beatles, not just U2, it's not just Sting. It's, 10 out of the top 10 artists, Drake, Taylor Swift, make your list, are Universal artists. You have a company that has incredible historic content, and a company that is where every great artist wants to, aspiring artist wants to, partner and have Universal, help them, break as a successful artist. And so owning, I can't think of a business in the content space. I mean, Netflix is amazing, but they have to spend billions and billions of dollars to create content that is not so valuable, the day after you watch it, where music content is really forever. So it's an amazing business.
You always talk me into these things. You talk me into the
digital perspective.
You talked me into the Hong Kong dollar. You know what I mean? That peg was supposed to drop off there so long ago. You're so compelling whenever you're explaining everything that I just never know when to. But it's difficult,
well,
obviously.
I would say, actually, go look at our batting average. I would say our batting, we've had some very high-profile failures.
Nope.
But you can kind of count them on, one, maybe 1.5 hands. And I would say our batting average has been probably 90+%. It's been very, very high. We do very, very few things. And so as a result, we try to pick things very carefully. But I would say the probability that Universal is going to be a very successful investment over the next 5 or 10 years is really, really high. That's my view. And by the
Hey,
way,
Bill,
COVID
we're all
or
trying to
no
make
COVID, the business is going to do well. Yeah.
Well, that's what I wanted to ask you about COVID, because we're all trying to make sense of some of the market action that we saw on Friday and this morning as well, especially now as there's increased concerns about the Delta variant and what that may mean for the quote-unquote return to work and everything else that comes after. We've had lots of conversations on the air with you about your call about COVID and what it meant now close to 18 months ago, and I'm curious how you're thinking about the markets today.
Sure. I think it's a short-term versus an intermediate-term thing. I would say, the Delta variant is certainly a negative if you're unvaccinated today. And if you are unvaccinated today, it's a very high percentage. I would say think of the Delta variant as an injection of the virus, or a bit like a vaccine for everyone who's not getting a vaccine. And I think that's what's going to happen, right? And it's going to crowd out all the other variants, and that's actually a good thing. So if you look at the UK, 99% of the infections, the cases, are Delta cases. Today, it's something, I don't know, it's 55%, whatever the number is in the US, or the percentage. It's going to go to something approaching 100, because the Delta variant has an R0, if you will, of something like 8. It's close to measles, meaning it's unbelievably infectious. You walk by someone in a mall, and they breathe, and you breathe in, and you get it. And so the result of that is, unfortunately, if you're older, if you've got diabetes, obesity, some of these comorbidities, it's a very, very threatening thing, and that's why it's very, very dangerous. On the positive side, as long as you survive the Delta variant, I think it really increases the chances we get to herd immunity a lot faster. So I think you're going to see a very large number of people get infected, particularly in places, in states where the vaccination rate is low, and that's going to catch them up in terms of people who have antibodies, and it's going to crowd the hospitals. Although the good news is you've got a very infectious variant that appears to be not as deadly as some of the others, like the South African variant. So if this had been a deadly variant, a more deadly variant, and a more infectious one, I would say we'd be in a different place. But I think the hope is it gets people the antibodies they didn't get from being vaccinated, and that makes them less exposed to the extent the epsilon variant.
How does this, though, do you think, change behavior over the next several months, and therefore change the economic outlook to the degree that it may or may not? We're looking, obviously, at airlines, anything related with travel. I don't know if you think it's going to have an impact on the restaurant business. I know you own several of those. What's your take in terms of how that directly impacts it in the short and longer term?
I hope what it does is it motivates anyone who doesn't have a vaccine to get a vaccine. I don't think it's going to change behavior to a great extent. I think people are done, I am, with being in a cave, right? Hiding from the rest of the world. They want to go out. They're going to have fun. They're going to go to restaurants. You're going to see a massive, in my view, economic boom. On the margin, there'll be some people who are afraid. Some people who are afraid of getting a vaccine, and they're therefore afraid of going out. But I think we're going to have an extremely strong economy come the fall. I think people are going to return to work in September. And I think companies are going to insist on vaccines, and I think it's a good thing. And, I have, even some people in my own company that I would say we're probably 3 people who haven't gotten a vaccine. And, in one case, sort of a philosophical objection or maybe a religious one. And, my question is, you take antibiotics, you take other drugs. If you can take an antibiotic for, some other kind of infection, why won't you, have a vaccine? And would you rather? Other people are concerned about the risk, and the risk is, in my view, a lot greater that you get COVID than if you look at the side effects from getting.
So what's going to be the Bill Ackman policy at the office?
Return of vaccines.
What's going to be the policy? So for those 3 people who haven't been vaccinated.
Yeah, so I'm doing my best to convince everyone who hasn't gotten a vaccine by being convincing, and then by the time everyone comes back to work, we'll decide what we're going to do about our vaccine policy.
Also want to ask you just more broadly.
93%. Yeah.
I wanted to ask you about inflation, and both the inflation that we are seeing, maybe some of the supply chain issues that are creating some of this. The big question is this the new normal, or is it transitory?
I'm in more of closer to the new normal with respect to many sources of inflation. So one, I think inflation's understated. There's very, very significant they talk about home equivalent rents or ownership equivalent rents, and those are really understated. If you look at what's going on in the housing market, we have a housing boom. Talk to a home builder, everything's it's on allocation. You have to, and have a friend who knows the CEO in order to buy a home. So you're seeing housing prices go way up. I think the way the data is collected for the kind of CPI or other inflation numbers really understate what's going on in housing, and that's approaching a third of inflation. So there's housing inflation, there's real wage inflation. One of the big issues, and right. I think this is not a transitory thing at all, which is recruiting. Trying to get people to come work in a hotel, work in a restaurant. I think it's harder now because of some of the stimulus. I think it will be a little bit easier come September, but a lot of people have made sort of life choices and various things. I think you're going to have to pay people to come to work, and I think that's actually a big positive. It's probably a long-term positive for the economy. So you've had $5 trillion of stimulus, you have an increase in wages, you have a lot of savings, you have the stimulus of a lot of people being vaccinated around the same time. All of these things lead to massive, massive economic growth and demand, and we still have an extremely accommodative Federal Reserve. So I think rates are going up. I think rates are going up. Short rates, I think, are going to have to go up a lot faster than people think. And I think today's move is, I would borrow as much as you can at a long-term fixed rate on the basis of today's rates. But I would say, come the turn of the year, I'd be surprised if we're anything close. I think we're going to be meaningfully higher yields as people realize the economy is going to make a very big recovery, and that hopefully Delta variant, in a way, vaccinated, if you will, exposed a lot of people. Hopefully, they survive the exposure, and we get to something closer to herd immunity, and we get more people inspired to get a vaccine. And you could see a really, really strong 2022.
To the extent that there's a pullback today, and there has been on Friday, does that mean that you're a buyer in this market, especially of some of this? I mean, you've been making the big play that the world's going to come back.
So we're about to spend $4 billion on Universal Music Group stock, so we're very, very excited about that. We're not like a buyer of the market sort of in general. Markets in general, I'm not as good as assessing. I have to look at every company one at a time to tell you whether it's cheap or expensive. But we like the businesses we own. We're not, we're excited about the companies we own. We're excited about our view of where the economy is headed. We try to own businesses that are very insulated from the economy. What I can tell you is people are going to be listening to more music from more devices, in more places, in more countries. 6 months from now, a year from now, 3 years from now, 10 years from now, and owning a royalty on people listening to music is really a great place to be, and having one of the best management teams in the industry. So I'm sad, if you will, for Tontine. They didn't get the chance, and we've done a good job, I think, telling the story. The company's going to come public, third week in September. People have an opportunity to buy the stock there. It's actually better for them to buy the stock there as long as they can get it at a good price, because it will be liquid, it won't be locked up. And we're going to focus so we deliver for our Tontine shareholders a very, very attractive regular way merger. And so in a way, we have to thank the SEC. Let me just say one thing. I'm not being in any way critical of the SEC. I want to be really clear. We have the best capital markets in the world. We have the envy of the world in the capital markets, and that's because we have the best regulator, the best investor protections in the world. It's really important to keep that. I respect the SEC's judgment on this. At the end of the day, perhaps everyone ends up being happier. Vivendi's happier. Maybe our investors are happier. The short-term investors are happier. And hopefully the longer-term investors in Tontine we can deliver for. And if they want to buy Universal, they buy it in a couple months. And so thank you to the SEC. We ended up in this outcome, which I would say if you had asked me a week ago, I would say there's not a chance this would happen.
You've got 18 months now to buy another company. One of the arguments you made, by the way, around getting the second bite of the apple, I think, was that a smaller company would be easier to digest and there'd be a bigger pool. 2 or 3 of the big companies have been speculated about. Airbnb's already gone public. A lot of people talked about Stripe, Michael Bloomberg's company. How hard do you think it's going to be to find the right company over the next 18 months?
So the good news is we have what I call a running start. We talked to a lot of people before we settled on Universal, and then we stopped talking to people. But a lot of those people, we can easily re-engage those conversations, I would say, quickly. And we've gotten a pretty good advertisement about this entity. And it's, look, I think the other thing that's really important to us here is I told Vincent Bolloré that we're going to close. And I said, even if for some reason something happens that we don't expect and Tontine doesn't close, we're going to close. And I think having a reputation for getting deals done and having an ability to work and, address people's sometimes complicated situations is something that we can bring to the table. We have a one-of-a-kind entity. We do have the ability to shrink it, if you will. We could always pay a dividend to people pre-transaction if we came to a view that the entity was too large for a particular deal. And there are things we can do to address the size issue. I think size is going to be an asset for us. We need one transaction. We're super focused. It's our highest priority, and I expect we'll get something done. I can't guarantee it. I can't promise it. But we have all the right incentives, and we're very long-term from a reputation point of view. We've got a lot of people excited about our Pershing Square Tontine holdings, and I want to deliver for them.
Bill Ackman, we appreciate you joining us on this day when the news broke and being with us exclusively this morning. Hope to see you very soon and follow the progress both of Universal Music and the rest of Pershing Square.
Thanks so much, Andrew. Appreciate it.
Thanks, Bill.